This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, February 18th, 2015. Euro dollar. So not much going on with the euro right now, with the market still locked within a consolidation off of the recent 11-year low. We're going to need to see a break back below 1265, the recent consolidation low, or above 1534, the consolidation high, for clear directional insight. A break above 1534 will extend the current correction within a downtrend towards the 50-day moving average, while back below 1265 would open a retest of 1098, which guards against psychological barriers at 110. Sterling dollar. So cable continues to extend its correction, with the market breaking out above 52.70 and looking like it wants to head up towards some previous support at 54.85. But ultimately, the downtrend remains firmly intact here, and a lower top is sought out somewhere around the 54.85 area ahead of a resumption of the downtrend and a retest of the 2015 low at 49.51. Dollar yen. Dollar yen remains locked within a consolidation over the past several months, with the market confined to trade between 115.55 below and the 7-year high from December at 121.85 above. Given the intensity of the broader uptrend, the market is favored to break above 21.85 and towards 125 further up. But right now, the market is still confined to this consolidation, and at a minimum will need to take out the recent high at 120.46 to extend gains. Euro Swiss. So Euro Swiss is getting a little bit more exciting into Wednesday, with the market now taking out some multi-day range consolidation between 104.15 and 106.50. The latest break above 106.50 suggests that the market could now extend up towards a measured move objective in the 110 area, while this market continues to correct from these overextended studies that we saw following the violent declines from several weeks back. Aussie dollar. So Aussie dollar has been locked within a consolidation over the past several days, with the market consolidating off of recent multi-year lows at 76.25. There is risk, if the market takes out 78.76, to continue this correction for a move up towards the 81.25 area. But if the market can't take out 78.6 or establish on a daily close basis above 78.76, this will open the door for a more immediate bearish resumption below 76.25 and towards a measured move at 73.75 further down. Dollar CAD. So dollar CAD is back to testing some recent support around 120.50, and if the market can take out this level, it will open the door for a fresh downside towards the 120 area. But the market is locked within a well-defined uptrend, and any setbacks are viewed as corrective in favor of a higher low ahead of a bullish resumption back above the recent highs that we saw at 128 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi, since basing out at 71.76, has put in a nice correction, with the market now heading towards some key previous support at 76.09. But any additional gains beyond 76.09 should be limited, with a lower top sought out in favor of a bearish resumption back below 71.76 and towards the 68.55 area further down. SPX 500. The S&P 500 is broken to yet another record high, this time taking out key psychological barriers at 2100. But even with the market extending to fresh record highs, the gains still seem exhausted, and the market will need to establish above 2100 on a weekly close basis to convince of fresh upside over the medium term. But inability to establish a close above 2100 on a weekly close basis will put the pressure likely back on the downside, with a break back below 2083 now required to open the door for the potential reversal and trend exhaustion. Gold. So gold is getting interesting right now, with the market pulling back over the past several days, but now falling into some key rising trendline support off of those critical lows from 2014 at 1131. The rising trendline support comes in right around the 1200 area, and as such, any setback should be very well supported in favor of a higher low ahead of a bullish resumption back towards the recent highs that we saw at 1307 and towards 1345 further up. That's all for now.